Thank you, IPO and Chill, for leading us and moderating today. And thank you, everyone, for coming and listening. And we will do our best to answer any and all questions as honestly and openly as possible.
Awesome. Well, let's get right into it then. I understand that there are likely people here that have been part of the journey in the beginning, and there are probably people here that have just joined. So, in order to just level the playing field a little bit, Publius, why don't you talk a little bit about what Bean is, what the vision for Bean is, and where we are right now?
So, Bean is a decentralized stablecoin that is not backed by collateral, but instead is backed by the credit of the Beanstalk protocol, which issues the Bean token. So instead of using any existing collateral, whether that's on-chain collateral or off-chain collateral, Beanstalk takes a radical departure from the collateralized model. And there are a lot of benefits that come with ditching the collateral, which we can get into. But the fundamental aspect of Beanstalk is that it is not issued by a centralized provider, and there is no collateral held anywhere to back Beans, and instead it is dependent on the credit of the Beanstalk protocol. So the ability for Beanstalk to attract credit is the main driver of stability and therefore the main driver of utility. So you asked where we are now, and the punchline is that we are currently having walked through, or walk isn't the best word, but we've, as a protocol, Beanstalk has traversed through some forests over the past month and a half, but it's come out attracting a large amount of lenders and a large amount of loans. And the ability for Beanstalk to attract loans over the past 6 months, or 6 weeks, excuse me, has been the main driver of the return to one, and the ability for Beanstalk to oscillate the price of one bean over $1 over the past couple of weeks. So to give a little bit of a high level overview of what's been going on, especially if you look at, for example, the all-time price charts in the middle of September, there was a major short-term period of growth in Beanstalk, quickly followed by the beginning of the first major debt cycle, which, as we just said, thus far, Beanstalk has been able to work its way through the debt cycle by consistently being able to attract lenders and attract loans. So for completion, what actually happened over the past 2 months or so is, and we still don't understand exactly how it happened, but it seems that Beanstalk went viral on crypto Twitter about 6 weeks ago, and at the time was trading at $1 with a $2.5 million supply or so, so a $2.5 million market cap, and there was such a large volume of capital that came into Beanstalk over a very short period of time, $6 to $8 million or so of Ethereum in just a matter of hours, such that the price was pushed as high as $4. The market cap was pushed as high as $40 million. And this capital, which came in a very short period of time, very quickly left Beanstalk. And one of the members of our Discord said it best, and we've been using this line a lot because of how apropos it is. They said that when the apes who pumped it realized that they could not exploit Beanstalk for their own immediate personal gain, they immediately left. So on the one hand, that is very encouraging and very exciting to us that a lot of the incentive structures and the rules that create the incentive structures within Beanstalk worked sufficiently well such that the pump didn't continue uh, indefinitely and thus far it appears didn't continue to a size that was unsustainable. So the post-mortem, or it's not sure if it's a post-mortem since Beanstalk is alive and well, but the post-mortem of the pump and dump is that uh, after all of the capital left, and they came in and left over the course of around a week, the price was as low as 24 cents. And since that low, Beanstalk has been able to return the price of one bean to $1 by raising the weather relatively consistently to continue to attract new loans and new lenders. So when we kind of look at how Beanstalk has performed over the past month, the main thing to look at is given the order of magnitude of capital that flowed out of Beanstalk, flowed in and out of. When you consider that the market cap was as high as $40 million, but the maximum supply to date was only $25 million, we look at that and say Beanstalk is resistant to the type of inorganic demand that created unreasonably large growth in something like ESD or DSD or a basis cash that ultimately made it such that none of those protocols had a chance to survive in the long run because they would grow too fast on the upswing. We looked at what's happened over the past month with Beanstalk being able to cut off that major growth cycle. And then once the growth cycle was cut off and all of that capital left, or a large percentage of that capital left, Beanstalk has now been able to attract enough credit such that the price has started to oscillate back over the past almost 2 weeks now. So that's a little bit of a high level synopsis on, or a high level summary, we should say, on what's been going on and how we got here. And just to wrap it up, in terms of our attention and our focus and our mind share on like how we spend our time and our focus and our energy, whereas during the major debt cycle, which to some extent we're not entirely out of, which we can talk about how to gauge where we are in the cycle in this conversation. But regardless, our mind share has largely shifted to looking ahead and starting to think about how Beanstalk goes from where it is today, which is starting to establish itself as a protocol that can regularly return the price of one bean to $1 into the protocol that supports the ubiquitous stablecoin of all of DeFi. So this is a very exciting time for us. Those are obviously very exciting thought exercises for us to get to perform. And we're very excited about what is to come and the work that needs to get done on Beanstalk. But generally, what has happened over the past 6 weeks has been very encouraging to us and has us incredibly excited to build a strong community around Beanstalk that will continue to build everything around it that will fall into place as beans start to become adopted as the stable coin of DeFi.
Awesome. Thank you so much for that. That's super, super descriptive. Even just looking at the bean price chart and thinking through all the timeline that you talked through, it's the story is very, very clear. And even now looking at that stabilization, the points you were making about how the protocol really has kind of stood the short test of time, short but turbulent test of time, very, very clear. One thing, we have a couple more people in the room, so if you just joined, thank you so much for joining. This will be recorded, so in the event that you do have to leave, you can come back and listen later. We're going to run about 2 hours, and towards the end, to Publius's point about community engagement and involvement, for those who do want to stick around and essentially raise your hand or learn, what more you can do, we'll have some time to do that as well. Publius, I think it would be a good idea now, especially because we have some more people in the room. Do you want to talk a little bit about who is Publius? Is this the Illuminati? What is the team behind this project, and what would you like folks to know about the team?
Yeah, so explicitly, we are everyday peoples like yourselves, and we are uh, we're a group of friends first and foremost that are highly encouraged by the type of change that cryptocurrency, uh, blockchain, but more than that, a whole infrastructure developed on public-private key cryptography uh, really presents to us a vision for the future that is much more encouraging than you might otherwise see looking at the daily news. And so back in around Thanksgiving of last year, we were hanging out, catching up over the holidays, and discussing, the world. And it was the usual chatter. One of us doesn't like our job and wants to do something more interesting. And we were just brainstorming if we wanted to work on something together, what would that look like? And at the time, ESD had been kind of blowing up, and we took a look at it that evening together. We read the white paper, we worked through it, and we had kind of two conclusions. One was very clearly the market is indicating that there's a high level of demand for a decentralized, non-collateralized stablecoin, and that was very much in line with our general uh, understanding of where crypto is at as an industry, where scaling is probably the biggest hurdle. But then very shortly thereafter is the need for a decentralized dollar with economics under it that actually make using protocols like Augur cost effective. And we can get into exactly how that works at some point. But the second conclusion we had was that we could do a lot better. And so originally, the idea was that we would take the ESD code and our economic model and make minor, although substantive changes to fix a lot of the tragedy of the commons issues that were evident in ESD and DSD and the like. But ultimately, whether that's because we have too much ego, too much hubris, or we just take ourselves too seriously, we ended up kind of throwing out the minor change idea, and we decided to build Beanstalk totally from scratch. So that required, and they went hand in hand, but the requirement for a total rewrite of a protocol from scratch was largely the result of a bunch of new economic incentive designs we wanted to add on to Beanstalk. And it ended up going from what we thought would be a couple of months of side work to ultimately, this is now all of our full-time jobs. And we ended up spending around nine months or so before we pushed in the beginning of August to mainnet to make this thing have the best possible chance to succeed that we could possibly give it. So just from the start, there was no pre-mine, no pre-sale, no early investor access. The first 100 beans were minted when the contract was deployed, and 100 beans is what the Sunrise Function award starts at. So really in line with the rules of the protocol. And then since then, 100% of the new bean supply has been created according to the algorithm as it's defined in the smart contracts. So you've been doing this for almost a year now. We're approaching 11 months, and thus far, it's been the journey of a lifetime, and we're incredibly grateful for the opportunity to continue to work on Beanstalk, and our hope is to inspire others to start to work on Beanstalk as well, such that in the not too distant future, Beanstalk is not solely reliant on Publius, but instead is supported by a decentralized community. And we're very encouraged that we're starting to see the beginnings of that transition take place, and it gets us very excited.
That's great. And to that point, we can get into this in a few minutes about competitors and other protocols, but in general, just as I'm sure other folks have this question, how much unilateral control over the protocol or the platform does Publius have? And then the reason I asked this question, and you alluded to this a little bit earlier, saying you didn't take an initial investor group, the beans are minted according to the contracts. Just in terms of what can change at a moment's notice, how much unilateral control does Publius have? Does it have any?
Yeah. So the deployment address, which deployed the smart contract on Etherscan, you can search it. It comes up as Beanstalk contract deployer, I believe. That wallet address at this point in time still has the unilateral ability to modify Beanstalk. And if we go back around a month or so ago, there was two separate instances where we pushed minor changes to the smart contract directly, circumventing the BIP process, specifically because there were minor errors in the code that were resulting in small misallocations of beans, which in total, the order of magnitude was around 5,000 beans or less. And those are the types of things that at this stage of the game, because Beanstalk is so new and has yet to be audited, and we can talk about how the audit process is going, we felt at launch that it would be meaningful from a security perspective to have the ability to fix certain things like that at a moment's notice. And the way that the contract and the governance process in Beanstalk is composed, at any point in time, any member of the community could propose a BIP to remove this ability from the deployment address, to remove this ability from Publius, and nobody else does. At some point in the future, we intend to make such a proposal, but that would likely come at some point a little bit further into the future. Certainly, once Beanstalk has been audited, after that, that conversation can start to be had a little bit more seriously. But in the short term, that is the only control that exists on top of Beanstalk, and we're obviously committed to being as transparent about that as possible.
Got it. Okay. So moving along, you had mentioned a few in the origin story of Beanstalk. You had mentioned you had looked at the space. Let's talk about the space a little bit. And some of these questions obviously come up in the AMA. When you think about your competitors, and competitors may not even be the right word, but when you look at the space for not just stablecoin, but generally these reserve type protocols, a couple of names come up like MIM or OHM, there may be others. When you look at the space, maybe talk to the group a little bit about what does the space currently look like? And relative to some of these folks, how does Bean look?
Sure. So, per usual, the general overview of the space is that it is moving a million miles an hour, trial by fire, and all of that is very conducive to the industry moving at a lightning quick pace. But there's a lot of also damage that is done when you move so quickly. Now, with regards to where we fit into the ecosystem, or where Beanstalk fits into the overall ecosystem, there's two separate angles here. The first is that there is certainly in the long run, hopefully, going to be non-US dollar currencies that are used throughout DeFi, used throughout the general cryptocurrency slash blockchain world, where there isn't necessarily a reliance on the US dollar. And something like is an attempt at that. Something like Bitcoin or Ethereum could end up filling that general use case of some sort of unit of account that is sufficient for the members of the ecosystem to use it as such. But the transition for the space to start to use an asset like that is a long one. And so the second angle to come at this is, in the meantime, there is a major demand for US dollars on the blockchain. And we can also, if it would be helpful, talk about the transition from a US dollar centric DeFi system to a non-US dollar DeFi centric system and how that would affect Beanstalk at some point, in the distant future. But at least in the short term, there is very clearly a strong market demand for US dollars. And so MIM is an example of an innovation on top of the traditional MakerDAO CDP model, which is the epitome of things move really fast in this space, and the fact that MIM has started to be widely adopted is more evidence that there remains a huge amount of demand for US dollars on the blockchain that demand is not being met. And MIM is another source of supply of US dollars that can meet some of that demand. And so it has started to be more widely used and adopted. So we look at that and we say, well, there is very clearly still excess demand for US dollars. And this is the fundamental problem that Beanstalk solves that none of the other current implementations that are out there, like a MIM, actually do solve. And the specific issue, we can go back to the Augur example I highlighted a few minutes ago, which is, let's take a stupid simple example of how the current shortage of dollars on the blockchain is causing a major decrease in what is currently practical or cost efficient to use DeFi for. So in the case of something like Augur, which to us remains one of the coolest ideas to date in cryptocurrency, like the ability to make a market in anything you want, is a pretty powerful idea. And as someone who entered the crypto space when Augur was being built and hyped up, we ask ourselves, well, why isn't Augur being used in any significant capacity? And in our estimation or our understanding, the main reason for this is that there is a major shortage of US dollars on the blockchain. So currently, if you want to use Augur, you have to either use Ethereum or use a dollar stable coin. And if you use, you may be able to use other currencies, but the problem with using any general currency is the same as applying using Ethereum. I'm just not up to date on the latest currencies you can use on Augur. But if you use Ethereum, at the very least, unless you're comfortable going along Ethereum while you're making your markets, you have to hedge the Ethereum exposure. And more than that, which makes the market very difficult to make in Ethereum, if you are making a market on, let's just say, the NFL football games this Sunday, if I am a customer and the market is denominated in Ethereum, I may not be interested in taking on Ethereum exposure in the meantime while I'm making my bet. And certainly, when we think about how this affects the general ability to attract or build a market or multiple markets using Ethereum, it makes it such that the demand for those types of markets is usually not enough to make it an effective market to make. Whereas, and the main problem being the volatility of the underlying asset that the bet is denominated in. Whereas, if you use a US dollar, now you don't have the same volatility. But this is where the economics come in and become a problem. Because currently there is such a shortage of dollars on the blockchain, that has led there to be incredibly high borrowing and lending rates for USD stablecoins. And so if I am a holder of USDC or USDT or DAI, and I am interested in making a market on Augur for the NFL games this weekend, I have a choice. I can either lend out my stablecoin for 10 or 15% a year, or I can try to do better than that by making a market on Augur. And when you factor in all of the fees for borrowing and the fees for transacting on Ethereum, now it isn't just that you have to make a market where, if you're right 51% of the time and wrong 49, or you have even a marginal profit in the markets that you're making, that no longer becomes cost effective to make that market, specifically because the borrowing costs are too high. And so the opportunity cost that is introduced by the shortage of supply of US dollars is what has largely led to many of the use cases for cryptocurrency and for decentralized finance not being cost effective from a purely economics perspective to make. And to restate it, the main driver of the shortage of supply is that the requirement to use collateral makes it such that you basically can't get enough dollars or a dollar's worth of capital locked up anywhere in order to meet the demand for US dollars on the blockchain. And so the way that Beanstalk goes about radically transforming DeFi and what makes sense within DeFi to use is it totally changes that relationship between supply and demand, and therefore also changes the relationship between using US dollars on the blockchain. So whereas in the instance where there is a shortage, and anytime that you're not actively making the market, you don't want to hold the US dollars. In something like a Beanstalk, which state explicitly, if you hold beans at any point in time where you're not actively using those beans, you can deposit those beans in the silo and earn passive interest, Monday to Saturday, and then on Sunday make your markets or however it may be. In the meantime, you're collecting passive interest instead of having to pay it for holding on to your US dollars. And so when it comes to the actual dynamic in just the Augur market example, instead of having to pay to borrow the US dollars to make the market, now with one initial investment to purchase the beans that you're going to use to make your markets, in between making the markets, you can passively deposit your beans in the silo, earn interest on them, and then whenever you need them to make your markets, you can withdraw the beans again from the silo. And obviously this becomes even more practical to do once the withdrawal time is brought down. Currently it's a day, which creates a little bit of friction to do that. But over the next couple of months, our expectation is in the near future to propose a BIP that will lower the withdrawal fees over the next couple months as Beanstalk continues to demonstrate stability. So that will further increase the utility of using beans. And that's just one example, but this plays out at a million different levels within the DeFi ecosystem of how currently the shortage of US dollars created by the collateral requirement is the main inhibitor to DeFi really taking off and everything that is even moderately cost effective to do will start to be done. And the main reason none of it is currently cost effective is because of the shortage of supply of US dollars on the blockchain. And Beanstalk is able to solve that because it doesn't have collateral requirements.
Great, thank you. And look, you talked a lot about, not to boil down all of that into two sentences here, but you talked a lot about the bullish factors, is what I'm hearing, right? There's huge white space. We're talking about the market for U.S. dollars. There's also a shortage where, we're able to provide something potentially at a lower cost. Um, talk a little bit about, the other side of the equation. So, what are the biggest existential risks to the success of Bean? Publius, are you there? Watching football? Guys in the room, we're just on standby a little bit. Publius, let us know if you're back.
Sorry, my mic got messed up somehow.
Oh,
Can you
no,
hear me
no.
now?
Yeah, I can hear you.
What was the question? Apologies.
No worries. We just talked a little bit about, you gave a great example about how all the bullish factors seem very clear, right? We're talking about the market for USD as a whole, which, relative to Bean market cap is obviously very, very high, a lot of white space. What is the other side of this equation look like? So when you think about the largest existential or even execution risks to the success of Bean Protocol moving forward, what would you say those factors are?
Sure. So we believe in leading with punchlines and being as open and honest as possible. So the punchline is Beanstalk is still in what we would consider like an infant stage. And when you're dealing with an infant, they need a lot of neck support and a lot of head support. So at this stage of the game, Beanstalk is still in need of a lot of support. And if you compare Beanstalk to the gold standard, which is Bitcoin, which has been through the ringer, has a massive, truly decentralized community of participants and contributors that don't all agree with one another. And obviously, Satoshi is not an active participant in Bitcoin. To get from here to there is a major, and obviously that being the gold standard, if Beanstalk gets to that level of decentralization, that will be a major achievement. Getting there is totally within reach. It's just going to require a lot of effort and organization on the part of the community. So to answer explicitly, what are some of the areas that are currently the biggest vulnerabilities? Number one is currently we are still in the middle of the first major debt cycle for Beanstalk. And on the one hand, the fact that it has been such a large debt cycle is incredibly bullish in the long term for Beanstalk if it can get to a place where it can go through another major debt cycle. So if you think about the way that Beanstalk is designed, it has 3 different debt levels. Currently, the excessively low debt, optimal debt, and excessively high debt are 5, 15, and 25%. And so Beanstalk tries to keep its debt level around 15%. But during a debt cycle, the debt level will always go potentially much higher than that. And so when we try to analyze the overall health of Beanstalk and the current state of things, the debt level is one of the best indications of where we are in the cycle. So the fact that the debt level is very high is an indication, continuing to go higher is an indication that we're still in the debt cycle part of things. And if you want to be more explicit or more correct with your analysis, the real thing to look at is the available soil, because the available soil, which thus far has still been hanging out close to the maximum soil rate, will only start to come down in earnest when there is a disproportionate amount of time spent above the peg versus below the peg. And so currently, the fact that even though the price has started to oscillate around one, the soil has remained high. That means that we are still in the debt cycle, and until the soil has really been eaten through almost entirely, we are still going to be in a debt cycle. So if at this point in time, the number one risk to Beanstalk is that if $10 million of capital left Beanstalk again over a couple of days, like what happened a month ago, it remains to be seen whether Beanstalk would be able to issue enough debt and attract enough lenders to issue that debt to bring Beanstalk back to one. And even if it could do it again, maybe it couldn't do it a third or a fourth or a fifth time. And at some point, you enter a debt spiral. So this is one of the main reasons why Beanstalk focuses on not just keeping the price at $1, but also focuses on returning the debt level less than 15%, such that the next time there is a major debt cycle, Beanstalk has already paid off a lot of its outstanding obligations, so it's in a great position to go through a debt cycle. So until if we lay out based on the current state of the system, and that definition of the debt cycle that we just laid out, there is going to be a significant period of time between here and there being when the debt level is back to around 15%. So number one risk from an economic perspective is that between here and there, which may be a couple months, there's another major crash in Beanstalk. Now, that may make you nervous, as it should, but based on the rules and the incentive structures created around Beanstalk and what has transpired thus far, it seems to us increasingly unlikely that type of major outflow from Beanstalk at this point in time is possible. It is possible in the sense that it could happen, but it wouldn't make sense based on what we've seen so far. So what we mean by that is because Beans has been back at one for almost 2 weeks now, and we've seen a slight uptick in withdrawals since Beanstalk has been back at one, indicating that there was some capital that wanted to leave once we returned the peg. In general, the withdrawal data has been relatively consistently low since that initial dump after that first pump. And what that indicates to us is that two things. One, the stock and seed incentive structure is working to a significant extent. And two, the fact that the stock and seed incentive goes up linearly over time makes it such that anyone who didn't withdraw yesterday is less likely to withdraw today. So every day that Beanstalk hangs out and oscillates above and below one, and someone doesn't leave the system, that makes it more likely that they're going to hang out for this growth cycle as we get out of the debt cycle. And so just looking at the data, we feel pretty confident and comfortable that the vast majority of capital that was going to leave Beanstalk before we start to see real growth has left. And in order to dump Beanstalk, if you're not already in Beanstalk, you need to buy beans. And Beanstalk is designed such that anyone who wants to come into the system has a very hard time to do that in a way that is cost effective for them, unless they do want to hold beans, stock, and seeds for a longer period of time, which is exactly the dynamic that we saw play out about a month and a half ago. And you may then ask, well, why can't that happen again? And someone just try to kill Beanstalk by burning a couple $1 million. The main reason that is very unlikely to happen again uh, is because of the size of Beanstalk at this point in time relative to the size of the liquidity pool and the debt level. So one of the main reasons why the growth and debt cycle was particularly large, even in, if you would say within the context of other uh, similar stable coins, it was much smaller um, than ESD or DSD, for example. But in our estimation, it was still larger than optimal, was for a few reasons. The first is that there was basically no outstanding debt or no pods the last time that this pump happened. And so all of the supply of beans that might have been sold into the pump were locked up in the silo. Currently, because there's so much unharvestable pods, if someone were to come in over a short period of time and try to pump the price, there would be a large amount of pods that could come harvestable and sell into that. And so you're not going to have nearly the type of price growth that we saw 6 weeks ago because of the outstanding debt. And furthermore, because the liquidity as a percent of the total supply of beans is also much less than it was during the first pump, the rate of inflation will also be much lower, even in the instance where someone tries to attack beanstalk by pumping it too much. So, from that perspective, uh, you know, there's a lot to be said for the current state of beanstalk is much, much, much more resilient um, than it was a few weeks ago, and that doesn't even include the fact that currently it has demonstrated that it does have the ability to bring beans back to one, which should be a major driver of future demand. So, sort of creating utility by creating stability is what will ultimately lead to adoption, and adoption is what will ultimately get beanstalk out of the debt cycle. So, one of the major things to focus on from the community perspective over the next 3 to 6 months is getting beanstalk incorporated into a variety of other protocols where there is utility for beans.
Got it. And, as we're moving more into the analytical elements of the protocol, let's focus a little bit more on some of these very important details that talk about the protocol features. So we talked a little bit about the dollar, right? Obviously, the dollar peg is important for a stablecoin. When we look at the history of the protocol over the last few weeks, there have been sustained periods where bean price is below a dollar, and then now recently there have been some periods where for longer times it's above a dollar. As we scale, so as this continues to grow, how can you or how do you think about how Bean moves around the peg? So is this as we go from, let's say, 20 million market cap to 200, and then let's say 200 to 2 billion, is there a way that you can either project, or how do you think about the price of Bean as it dances around a dollar?
So, this is a question that requires a high level of speculation, and we're happy to speculate, at least on this topic, but take our answer with a grain of salt as market participants are ultimately going to be the deciders of how the market works on a minute to minute, second by second basis. And uh, these types of predictions are incredibly difficult to make as the structure of markets are also often determined by um, a lot of factors that are not just purely analytical. Um, Nonetheless, the volatility around Beanstalk um, will probably decrease on an absolute basis, meaning that the ticker price, just for example, if we compare it to what's happened over the past 2 weeks or so, where more or less the price has stayed within the 0.95 to 1.05 range, um, our expectation would be that as Beanstalk grows, as more people start to think of a bean as $1, that range will start to be further restricted. So it's very hard to give a sense of order of magnitude. How quickly does the price of one bean stay 0.99 to 1.01? Impossible to say exactly. But the general idea behind how this will work is that the more times that bean crosses the peg, the stronger the expectation that the price will cross the peg again at some point in the future. And that expectation creates an arbitrage opportunity where anytime the price is above one, you have an expectation that at some point in the near future it will be below one. It makes sense to sell above one and then vice versa to buy below one. And so as the price starts to or continues to oscillate over one, that arbitrage opportunity gets created. So based on current market data and how Beanstalk has been trading, it seems like this is still at the very beginning stages of happening. Obviously, with like 2 weeks of crossing the price over the peg, there isn't a strong expectation that that will happen again immediately or soon, but the expectation is increasing. So as that expectation increases, we would also expect the range of trading of bean to get tighter and tighter. Now, it's important to note that the way that the bean supply is changed is a function of price, but it's also a function of the depth of liquidity of Beanstalk and specifically the Bean ETH pool. And so another thing that we would expect as Beans becomes more adopted and as the return for providing liquidity becomes more apparent, we would expect the liquidity in the Bean ETH pool to also start to increase significantly. And that has a complementary effect on the dampening of the price because the more liquidity there is, the more volume can be traded with having a less effect on the price. And so between those two factors, higher liquidity and higher degree of arbitrage around $1, we would expect the range to tighten and tighten and tighten and tighten and tighten over time. But it's very difficult to make a prediction as to the rate of tightening specifically.
Got it. Okay. No, that makes sense. We would imagine this would stabilize over time, but of course, this is a market instrument. We're coming up on the 1 hour mark. I'm looking at the audience and I'm seeing around 40 people. So it looks like we have some new entrants. If you're just joining, thank you so much for joining this community event. It's been great so far. We talked about the protocol origination, the origination story, and now we're getting into more of the details around some of the instruments within the platform, like the PEG. This will be recorded, so for those of you who joined late and want to catch the beginning of the conversation, you'll be able to listen to that. And around over the course of the next hour, we'll continue to go through questions. I'm obviously just asking questions on my mind, but also looking through the questions in the AMA questions thread. So if you do have questions and don't want to necessarily raise your hand here and say it out loud, feel free to dump those into the thread and I will pick those out. But moving along, since we have about another hour before we may break out into some community conversations, let's talk a little bit more about, I guess, this idea that you mentioned before, Publius, that obviously in the silo, folks get both seed and they get stock. The seed obviously allows or incentivizes them to stick around, and the stock determines how much of new bean supply they get during new mints. Can you talk a little bit about the future of stocks and seeds? There's been some chatter in the chat about them being tradable in the future. What's the ultimate vision for stocks and seeds?
Now, this is a question that puts a smile on our face. So, stock and seeds becoming tradable is going to be a major step to taking Beanstalk from what it is today to what it can become in the future. So there's a lot of economics here that we can try to lay out a large portion of, and we're happy to explain as much as people want how we see it going. But the long and the short of it is, uh, our expectation. First, let me lay out the plan, and then I can break down how this works in an economic fashion. So the plan is to create stock bean and a seed bean pool, Uniswap pool, um, and similar to how you can currently deposit uh, LP tokens for the Bean ETH pool into the silo in exchange for stock and seeds, you will also be able to deposit LP tokens for the Bean stock and Bean seed pools into the silo in exchange for more stock and more seeds. Now, at first glance, you may say, doesn't that make it such that stock and seeds can just be infinitely minted and that type of inflation would make them worthless? The answer is no. Specifically, because we were proposing, or this idea would consist of creating a bean stock and bean seed pool, our expectation is that you basically very quickly run out of beans to use to LP with the stock and seeds, and therefore it will be something that creates a lot of demand for beans. So how does that work? Let's take a very simple example, which is I have a bean, deposit the bean in the silo in exchange for one stock and two seeds. I now have a deposited bean, one stock, and two seeds. In this model, or this iteration of how stock and seeds would be liquid, similar to how you can currently convert a deposited bean and match it with Ethereum, one bean worth of Ethereum, and get Bean ETH LP tokens that are deposited in the silo, we'll be able to take a bean, deposit that bean, and then convert that deposited bean into bean stock and bean seed liquidity pool tokens. And so you can imagine, and to some extent, you have to make estimations on the price of stock of seeds, but the arbitrage opportunity introduced by the fact that anyone can buy a bean, deposit a bean, and then get stock and seeds basically makes it that the price of one stock plus two seeds has to be less than a bean. And so with that in mind, the amount of, if you do this once, you get additional stock and additional seeds. You now have stock and seeds that are liquid that you can LP if you want to LP again, but you're now out of beans. And so in order to cycle again, you actually have to buy more beans in order to LP them. And so from a macro perspective, the incentive to deposit your stock and seeds into the liquidity pool instead of having them just sitting there in your account should also create more demands for beans on top of creating a use for, we would expect the vast majority of beans that are currently deposited in the silo collecting dust would immediately start to be used to offer liquidity for stock and seeds and start to earn additional interest. So that is just kind of the first introduction to how we're thinking about stock and seeds. That is, you can start to see every bell and whistle that is added on top of Beanstalk at this point in time has to be constructed in such a way as to be deeply symbiotic with the underlying economics of Beanstalk. And in this case, creating a Beanstalk and a bean seed Uniswap pool seems to be thus far the most optimal solution we've come up with. And we think that it will have positive network effects on the price of bean, but also the meaning of having stock and seized liquid is that now you can have a market that reflects the future growth expectations of Beanstalk without that necessarily translating to the price of a bean. Meaning, if the short term inflation expectations are decreasing, you would expect the price of stock to come down. And because the pool is bean stock, the price of stock coming down means that people are selling stock in exchange for beans. And this now goes back to our conversation about creating utility. But the only assumption that this makes is that every time people are selling stock, they aren't necessarily selling them into Ethereum. They may be selling them into beans to go use the beans somewhere else. So the only way that this complexity is potentially not exclusively beneficial is if there is a low level of utility of beans, which is obviously currently the case. So when it comes to growing beanstalk in the right way, it sort of has to grow in a couple of different axes all at once. It can certainly be done, but it has to be done in the right fashion. And this is one of the main areas where our attention is currently focused.
Got it. Okay. And moving a couple of more questions on just Bean and stock. And, I see a lot of questions as well on the partnerships element and the outreach. I think maybe for the next few minutes, we can continue to go through some of the questions around the elements of the protocol. And then I think it would be nice to round out the conversation with, the looking ahead and talking about the partnership stuff. So with regards to continuing that conversation about, seeds and stocks, like two things, one, in terms of community initiatives, a lot of the community initiatives that have been planned, have been incentivized via beans. Do you think in the future there will be incentives in the form of seed and stock to drive some community initiatives?
If it were up to us, and it's not because beanstalk ultimately is dependent on the stockholders to vote, that would not be the case. I feel pretty strongly that one of the uh, main reasons why Beanstalk is money for people and not money for VCs or money for uh, whales is because the only way to get stock and seeds, sure, you can buy them, some people that have done this, but the only way to get stock and seeds is to buy and deposit beans. And the fact that fundamentally the only way to participate in the growth of Beanstalk is to buy the currency, or at least buy the seigniorage token from somebody else that bought the currency, makes it fundamentally different from a traditional seigniorage model, where the people that got in early are the only ones that are really profiting, and everyone else is just using the currency for utility. Instead, the fact that the only way to get stock and seeds is by buying, or the only way to create stock and seeds is by buying a bean and depositing the bean, that enables anyone to participate in the future growth of Beanstalk, and they don't have to do it in a way where they're just purchasing it from, the seigniorage shareholders that got in super early.
Got it. And in terms of, looking at just obviously the world of DeFi, but when you look at some other, not necessarily stablecoin protocols, but just other coins, right? And you go on Uniswap, there are pools, you can potentially generate yield by either staking or pooling. Are there any plans in the future to potentially create, stock and seed pools on a DEX like Uniswap?
Yeah, that's exactly right. So the idea will be that stock and seeds will have a Uniswap pool that is tradable against Bean. And so you'll be able to go from stock into any other asset on Uniswap. In general, when we talk about integrations with other protocols, the idea that stock and seeds become liquid is one of the main potential things that other protocols could find attractive to incorporate into. Um, for example, I believe MIM only allows you to deposit, to borrow against assets that are yield generating. So Bean might not qualify on its own, but stock and seeds, which both have their own individual yield components, seeds yielding stock and stock yielding beans, might be better suited for something like that. So the fun starts once stock and seeds are liquid, and then the amount of different financial engineering ideas that can be built on top of Beanstalk with a new sophisticated stock and seed price being overlaid on top of that becomes very exciting just to think about. So one of the main drivers of Beanstalk becoming the basis of DeFi is not just that you have a stable coin, you also have native markets that will be able to reflect some sort of future expectation of Beanstalk as well, meaning it's not just a current market. You also have markets that are, sort of a futures market, or at least a bet on the state of Beanstalk in the future.
Got it. And to that point on seed and stock liquidity, any info on timing around that?
So timing is a lot harder to specify. And the main reason for that is making stock and seeds liquid may or may not be deeply intertwined when we develop it with our layer 2 integration. So one of the things that the community has really emphasized, which is that they feel it is essential that we launch, or Beanstalk launches, Beanstalk that are supported on other EVM compatible chains, and specifically to do it in a way that creates a network effect around Beanstalk. And the main reason for this is that if we don't do it, someone else will launch a copy, and that copy on a layer 2 will effectively serve as a competitor. So that argument resonates with us, and we think that we figured out at an economic level, at least, what scaling to layer 2 would look like. To outline it a little bit, the idea would basically be that stock, seeds, and beans, basically any asset in Beanstalk, can be bridged through Beanstalk from one compatible chain to another. So if we were on Polygon, for example, and you had beans, or you had stock, or you had seeds on the main chain, you could bridge them over to Polygon without without needing to make any other transactions other than directly through Beanstalk. And the economics under it would be supported by the fact that the price of a bean is still 100% determined by the Bean ETH pool on mainnet. So the whole system is still orienting itself around one pool. But then in terms of calculating new beans or new soil that is minted, you could actually use the liquidity from the other chains as well for the Bean ETH pools in the other chains as well, but still have the accuracy of the main price. So the short answer is, when is all this going to happen? Well, these are deeply related problems, and we may be able to launch stock and seeds being tradable on the mainnet soon, but then that could delay, if we don't do it in tandem, scaling Beanstalk to layer 2. So in fact, this would be one of the areas where we would be most interested in feedback from the community. Which do they feel is more important to prioritize potentially launching to layer 2 in something similar to our current form sooner, and then launching stock and seeds on both mainnet and layer 1 and layer 2 at some point in the not too distant future. But the ordering is still up in the air, and each of these individual projects is at least a couple of weeks, but more likely around a month plus each on the labor side. And so kind of the last variable that will factor into timing is how quickly the quality of which we can surround Beanstalk with other developers. So that's an easier said than done task, in the sense that high quality Solidity developers are very difficult to find. But we've been encouraged by the amount of outreach our community has been making thus far to try to find high quality developers, and the ability to find them would certainly expedite our ability to push updates to Beanstalk.
Got it. I think to round out the conversation a little bit, we talked a lot about seeds and stocks. I think the next round of questions deals necessarily with like pods, weather. I think we should discuss pods, weather, touch on NFTs a little bit, and then ideally, Publius, we can go back to what you were talking about earlier about what you need the community to do, and we can talk a little bit about what's to come. On weather, as you mentioned before, we're obviously in the midst of a debt cycle, and clearly you can see that when you look at the weather chart. In the BIP, the latest BIP, there's been a proposal to potentially update the way or the rate of change of the weather. Just generally speaking, can you talk a little bit about how the weather has been working and what is the proposed change to the rate of weather?
Sure. So philosophically, Beanstalk doesn't care what the weather is per se. The only thing it cares about is that the weather is sufficiently high such that it can attract enough demand to return the price of one bean to $1. And specifically, Beanstalk would rather be aggressive, meaning have a weather that is too high. Maybe we should define that as conservative. So Beanstalk would rather be conservative, meaning pay too much and have a weather that is too high, than risk the opposite, which would be having a weather that is too low. And in the case where the weather is too low, that is how you can start to enter a negative feedback loop, like what happened 6 weeks ago or so, because the weather was at like 1% or something, because there were no pods and it had just been going through a period of growth. Weather was so low that it couldn't quickly attract lenders. Now, obviously, given the scale of Beanstalk at that point in time, and the magnitude of loans that it needed to attract, that would have been impossible regardless. In general, when the price is too low, Beanstalk is very aggressive and raises the weather 3% almost every season when the price is too low. And obviously, depending on the change in demand for debt, it may be slightly less than that. When the price is too low, and especially when the debt level is above optimal, Beanstalk is incredibly aggressive at raising the weather. Now, on the flip side, there is high debt, but the price is high, meaning that Beanstalk is going to pay off some debt right now. That would be the opportunity to potentially lower the weather. Now, originally, we set the parameters such that Beanstalk would be very conservative in how it lowers the weather, such that, and per our discussion a little bit earlier, trying to avoid entering another debt cycle anytime soon, Beanstalk would rather pay a marginally higher weather and make sure that it doesn't have a couple of day period where it can't attract any debt because the weather is too low. Accordingly, it errs on the side of raising the weather. Now, short answer is, in part due to the fact that this is the first debt cycle and has been so large, the weather has grown to a pretty high rate. And the point is that now that prices started to oscillate around one, it doesn't necessarily make sense for Beanstalk to continue to be so conservative and to continue to raise the weather so quickly, and the price is below one, and then not also mirror that by lowering it at a similar rate when the price is back above one. So originally the parameters were set to be incredibly conservative, and now that Beanstalk has started to prove itself and hold the price at one, we feel it's appropriate to change the weather changes very slightly such that there's a little bit more symmetry when the price is above one and below one. So as it hangs out around the peg, the weather is more likely to stay somewhat constant than continuing to rise. So this is a change that doesn't need to be made, frankly. We were debating whether to even do it, given that it's not essential. The way that the weather changes were constructed in Beanstalk is to make them incredibly modular and incredibly easy to modify just one or just a small selection of the 16 weather changes. And given that it does seem to us to pose a marginal benefit, makes sense to do it, and it also makes sense to demonstrate the ability for Beanstalk to make minor changes like this without any major adjustments to the protocol or the rules, but to just make minor changes to specific values to improve the efficiency of the system. Now, there was a question asked, and we had discussed it previously, on considering changing it from a linear approach where the maximum Beanstalk can change the weather rate is a maximum of plus or minus 3, an absolute value of 3, to a more dynamic weather changing mechanism where perhaps it changes instead of linearly, but in a multiplicative way, where instead of plus or minus 3 degrees, 3%, you could multiply the weather by 0.97 or multiply it by 1.03, and therefore have the weather much more rapidly adjust up or down based on changes in demand for debt and the price and the debt level. Reason ultimately we have decided not to propose weather that changes that quickly is twofold. One, weather in such a scenario where it could increase 3% every season, not linearly, but times 1.03 every season, if Beanstalk goes through a major debt cycle like it did over the past 6 weeks, the weather in that case would reach infinity, perhaps. You can't multiply 1.03 times itself indefinitely without the weather just starting to grow to a very unsustainable rate. But more specifically, if you think about the incentives on sowing beans to beanstalk, lending beans to beanstalk, sowing beans is currently, well, let's take a step back. The underlying mechanism is designed to attract lenders as quickly and efficiently as possible. First in, first out harvest schedule creates an environment where I feel like right now, based on the current price, the current debt level, and the weather, is an attractive time to lend to Beanstalk. First in, first out harvest schedule makes it such that I am incentivized to do it immediately. Because if somebody else lends in front of me or ahead of me, my rate of return is going to go down. Specifically, it's probably going to go down more than I stand to gain by waiting a couple of hours for the interest rate to go up. Whereas, and that's in the case where there's a linear increase in the weather. Whereas in the case where the weather can increase much, much, much quicker, the incentive to lend beans to Beanstalk created by the first in, first out harvest schedule is going to be greatly lessened because potentially if I wait a couple more hours, the weather could increase 100%. The weather could double. And the idea that the weather can double in just a few hours would greatly decrease the incentive to lend beans to Beanstalk in an efficient fashion. So, given that the idea is to attract capital as efficiently as possible, you don't feel like the multiplying method is the right method. Certainly at this stage of the game, where again the main issue is that the debt cycle has taken some time because there isn't a lot of outstanding demand for beans below $1 because it hasn't created utility, because it hasn't proven itself as being worth $1. So as that starts to happen, then you can start to think about maybe being even more aggressive or conservative again with raising the weather quicker and quicker. But even in that case, we would likely be opposed to doing it in a way that is potentially exponential in how quickly the weather grows.
Got it. Got it. Looking at the time, wanted to ask, one or two more questions about the protocol. I think we actually did a good job covering most of them, but obviously for those listening, and if you're listening from the future, if you're listening to the recording, obviously feel free to participate in the discussion in the general, and I'm sure there's going to be a community member that can either get you up to speed or answer the question on NFTs. Obviously, it was a fun little thing for those of you in the room who were sowing during that time period when the NFT mints were going on. I check my two guys on a regular basis. Have you thought about the future of what's going to happen with the NFTs? Is there anything the community should know? Are there going to be any potential benefits of either things that folks can do to generate utility, whether it's burning the NFT to earn either beans, potentially trading them to sow, and any kind of fun things planned for NFTs in the future that may have utility for the platform?
Sure. So the NFT event was a huge success in our opinion, and is also by the evidence of the number of bean profile pics in this AMA. It's evident that it has led to the start of a strong community. And so going forward, things to balance are using the NFTs or minting more NFTs or having an event, future events that create more network effects with diluting the value of the original NFTs. And so to some extent, we're going to take a cop out here and say that we like, for example, to do like a winter NFT edition, a BNFT edition, which may continue up to the 6,000 original threshold. Only about a third of the potential 6,000 were minted from the first event. So maybe more of those could be minted in the future, but it's a cop out because all of the decisions on the BNFTs ultimately will be made by the BNFT holders. And so we've tried to set up within our Discord server a BNFT club room where those types of conversations can be had. And anyone with a Bean FT can join the club room and participate in Bean FT governance decisions. So pending the approval of the Bean FT holders, there might be some really cool and exciting stuff coming in the pipeline. But that's a little bit harder for us to project forward, uh, you know, given that even today, uh, the decision making on that front is going to be 100% determined by Bean FT holders, and is more of a community thing at this point than an economics thing. And so we'd like the community to to lead the way on that front.
Okay, yeah, absolutely. I'm definitely going to be doing my part. And for those of you who do have BNFTs, I'm actually looking at some of the profile pics right now. We got a couple cute ones. I think that's great. I think ultimately at some point, similar to what we've seen with some other platforms, if there's a way to create some utility with the NFTs, whether it's through passive income or through giving us the ability to interact more with the protocol, I think that would be great. But point taken, I think for those of you who are listening and do have NFTs, please join that group and we can have those conversations. To round out the conversation that we're having today, Publius, I think the big question on our minds, and we talked so much about the health of the protocol and how clearly things are at least looking like they are working as planned as we move forward and we scale. Talking about scale, so there are two things that I think we should discuss. The first one being on the funding side, and the second being more on the marketing partnership side. And let's start with the partnerships piece. Can you talk a little bit about that front? So, with regards to Bean not only integrating with other protocols, but forming partnerships that would not only increase Bean visibility, but would also create other opportunities to penetrate this entire market. What are some of these partnerships that we're either looking at now or we're looking to do, and what can the community do to help?
Totally. The long and the short of it is that adding utility around beans is a chicken and the egg problem. It's a chicken and the egg in the sense that once we are stable, it makes a lot more sense, or at least as stability increases, it increases the incentive for beans to be adopted into any specific protocol. But the chicken and the egg is that the stability of beanstalk greatly improves as we should say the stability of beans greatly improves as beans and beanstalk are incorporated into other protocols. And so, given that we are anonymous, it's very difficult to, on our own, try to leverage a network, or our networks to get beans incorporated into other protocols. And this is likely going to have to be one of the main areas that the community steps up. And what we mean by that is protocol, to a large extent, is doing its job so far. The price of bean is oscillating around 1, and that's really the only thing Beanstalk cares about. Obviously, it wants to lower the debt level over time, but the main way that the debt level is going to be decreased is an increase in utility, which creates demand for beans and creates demand for being in the silo. The way to think about that is lending beans to beans is one side of the market, and you're lending beans to beanstalk with the expectation that in the future there will be utility and there will be demand for that utility. And then the other side of the market is the people actually taking advantage of that utility and using the beans. So on the first side of the market, Beanstalk seems to be doing a pretty good job. It continues to attract lenders, the pod line continues to grow, and most importantly, the price is staying at 1. So the next step is to start to have substantive conversations with various protocols that are interested in adding beans as an integration. Now, there's a lot that needs to be said here, especially given that, as we said, beanstalk is still in an infant state, and it needs a little bit of head holding and neck support. So if you look at, just for example, cream vulnerability that was exploited over the past couple of days, let's say theoretically beans or stock or seeds were used on cream, and there were large borrowing markets for beans. Let's just say there was 1 million or 2 million beans that you could potentially borrow on cream. Uh, what happened yesterday happened in this scenario where there's a lot of beanstalk assets on cream. Given the decentralized nature of beanstalk, whoever the attacker was may be very happy to hold their beans. At the same time, there's nothing beanstalk can really do to prevent that person from selling their beans. And if someone stole millions of beans and dumped them at this stage of the game, that goes back to what we laid out as kind of the main thing that beanstalk wants to avoid at this point in time, which is another major dip, to 50 cents, 20 cents, something like that. So there's a lot, just from a risk perspective, that needs to be considered anytime, at least at this stage of the game, beanstalk is incorporating into other protocols. Now, this goes back to the chicken and the egg, because as beans are incorporated into other protocols, that will lead to the debt level coming down, which will put beanstalk in a better position to take on more risk, adding more protocols. So very chicken and the egg here, and got to start somewhere. So if members of the community have a connection at a lending market, or at the very least feel like they have protocols that could benefit from beans, like Augur, and wanted to start the conversation of having beans potentially incorporated into any given protocol, we would highly encourage you to start those conversations sooner rather than later. We would offer that we're happy to talk to any development team that is considering incorporating beans into their protocol. And the last thing to highlight is, at this stage of the game, it's probably pretty important that whatever protocols we integrate into the get-go are very decentralized. Decentralization is obviously one of the main value drivers for Beanstalk, and exposure to a centralized kill switch is something we want to avoid at all times. And so again, putting assets at risk, whether that may be that they get hacked, or that a centralized protocol can use them against Beanstalk, all of that needs to be considered. It all needs to be considered in the general lens of beans are going to be incorporated across the board, and this is part of the process. And in order for beans to be incorporated across the board, it does need to start to be incorporated somewhere. So step one is proving utility by keeping the price at the peg. The protocol seems to be doing that reasonably well. Step two is to start to onboard beans into other protocols. Last layer to add on top of this, and we've already spoken on it, so we'll keep this brief, is that stock and seeds becoming liquid. That becomes a very interesting set of assets to incorporate into a lending or borrowing protocol, or something similar, because of the way that you can trade stock and seeds to reflect your position on Beanstalk, aside from just buying and selling beans, which can have a dampening effect on the price, which would obviously increase the utility.
Got it. And right after this, which I'm assuming will
Increase
be
the
in
utility, excuse me. Increase the utility.
increase the utility. There we go. There we go. That's what we like here. I I think the other piece of this, and we talked about this during the last AMA, I remember this on the funding side of things. So I don't mean in terms of funding the protocol at, like a startup funding type thing, more on the basis of either Silo or Silo LP, and even looking back to the comments you made about before the first cycle and how there were folks who basically were not permanent capital or high quality capital. You had mentioned during the last AMA that there were either some conversations or there's some obvious demand to go out and get, that high quality, long-term capital into the platform on the Silo or the Silo LP side. Can you give us an update? Are there any conversations there, or is anything happening in that regard on the high quality funding side?
So short answer is yes. We are encouraged both by the volume of conversations that we're starting to have with higher quality capital and also the conversations themselves. So when it comes to using capital for Beanstalk, there is the fundamental problem. It is a problem to some extent that there is no centralized entity with which to invest into. And so even if we have a great call with, a larger crypto fund or a, a crypto family office or something like that that might have a longer term time horizon and be interested in supporting Beanstalk in multiple sizes over a longer period of time, there's also no operating agreement for them to sign, or there's no contract for them to sign. And to some extent, that makes it a little bit hard to gauge how much capital has been deployed by larger parties per se. Obviously, the community has noticed, for example, when uh, one wallet with well over 100 million US dollars worth of capital started to sow beans. Um, and all we can say is that we are encouraged by those types of transactions that are the result of conversations that we're having. And our hope is to continue to have high quality conversations with hopefully high quality capital. And I apologize for the fire engines. But the point is that one other thing that's been very encouraging to us is that we've started to have lots of intros to higher quality capital from our community members. And so the fact that the community is starting to use their own network to try to bring high quality capital into Beanstalk is an indication that we're on the right track. So the short answer is, in our opinion, it's being received very well um, by the people that are receiving it. And as the price continues to be held at $1, we assume that there's going to be more and more converts into bean farmers.
Got it. Got it. Absolutely. If anyone here has easy access to a pension fund, please make yourself known. That would probably be the sleepiest, highest quality capital we can get. Um, all very helpful. I am looking through the thread. I think we did a pretty good job of going through a lot of those questions. We covered pretty much everything from the high level mission of the protocol to the competitors, the space. We talked very specifically about many of the protocol elements like stocks, seeds, obviously pods, weather. Um, I want to open up the floor. Obviously, if there's anyone that wants to ask something given the conversation we've had, please feel free to either raise your hand or dump something into the thread. While that's potentially happening, we got Bean Merchant on the stage. Bean Merchant, what's going on?
Oh, I was just gonna add that there will be a Bean Scholars Call next Tuesday for folks who like this AMA and want to kind of get deeper on Beanstalk. Someone mentioned that Ohm community did this really early on, where people who wanted to kind of learn more about the protocol and become experts just could kind of have a Q&A with Zeus, who is the founder of Ohm. So we're going to do something similar with Beanstalk. It'll be next Tuesday at 6 p.m. Pacific, and I'll send a message, but just wanted to make sure I said it during the AMA for those who are interested.
Yeah, I think that's absolutely great. So that's going to be Tuesday, 6 p.m. Pacific time.
Yep, that's right.
Awesome. I'll definitely try to join that if I can. I wanted to wait till this AMA, obviously, because we covered so much, but I want to start making some videos, and I absolutely think we need to start. I don't want to use the word, I don't want to use the P word pump here, but I think we need to start educating. Let's use the E word, and start educating folks about what's going on, especially given the recent activity on Twitter. So looking ahead, Publius, I think now is probably a good time to, and you've sprinkled this throughout the conversation. We've talked a lot about getting the community involved, and right after this, we're going to have a breakout room for people who want to stick around and get more into the weeds on that. But looking ahead, what are the biggest things on your mind, Publius, and what exactly is the focus from here on out? What are the things that we need to start focusing on, and what should we expect?
Awesome. So, first off, thank you, Bean Merchant, for coordinating that scholar call. And our hope is to do as much as possible to educate anyone who's interested about every question they could possibly have about Beanstalk. So, if you can't make that, shoot us a DM. If you're interested in Beanstalk, uh, we're committed to spending the time that you feel like you really have a handle on everything, and you can start to talk about it in a way that you feel confident in. Um, but at a more macro level than that, we've laid out a little bit of what the near future or the next couple of months looks like for Beanstalk. But I think it's helpful for everyone to hear specifically what are some of the ways that they can help, if they're interested to help. So number one has to be, we're still in the phase of trying to spread the word about Beanstalk. And so that can be as simple as uh, telling your buddies and your friends that this is going on, and a week later reminding them that beans are still at 1, and maybe a week later reminding them again that beans are still at 1. And over time, that becomes pretty compelling, that you're hearing it from word of mouth from people that you know, that this thing is doing well, it's functioning as intended, and it's paying you interest. Um, that seems to be thus far the way that we've been growing, is mostly word of mouth, and we'd like to continue that. A little bit more big picture than that is, if any of our community members have connections to high quality crypto podcasts, or other crypto news sites and the like, and they would be willing to try to set up, either a podcast interview or something similar for written form, we'd be happy to participate, and we think that would be a good way to get exposure to Beanstalk for more high quality, thoughtful individuals that are curious about what's going on here. And kind of goes without saying, but good to say nonetheless, that long form tends to be the best for something like Beanstalk, mainly because of the complexity of the system. In addition to just connections to uh, the media, there's also, we have a marketing budget, which was created. 80,000 beans were allocated to the marketing budget when BIP 1 was passed. And we're hopeful that the community will propose various things that they want to be paid for to contribute. So, for example, Dumpling, one of our community members, is going to make a proposal to the marketing budget to make some merchandise, and is going to work to start selling or distributing the merchandise to bean farmers that want it. And another example of how we'd like to see the marketing budget used is Bean Merchant is putting together some sort of meme contest, where people will be awarded beans for making the best memes around Beanstalk, or making the best educational content, or IPO and chill, in your case, the best short-term videos for Beanstalk. So there's a pool of capital, 80,000 beans or so, that anyone who wants to participate creating content around Beanstalk, creating additional documentation, whatever it may be, you can get paid in beans to contribute on that front. Another area where people can be really helpful to us is connecting us with developers, both on the Solidity front and the front end. We're at the phase where over the past month, Beanstalk went from a $2.5 million project to a 20-something million dollar project, and we're trying to scale the team around Beanstalk to reflect that growth. Obviously, the ability to attract high quality talent is a big part in making Beanstalk and the development team around Beanstalk something that can operate independently of Publius a reality. So, with that in mind, if anyone has in their network Solidity developers they think might be interested in getting paid from the developer budget in Beans to develop Beanstalk, we would also encourage them to try to connect us. And sort of at a more macro level, if anyone is interested in getting involved, but none of these ideas resonates or makes you want to get up and do it, and you have another idea for how to help or what can be a positive contribution to Beanstalk, we would encourage anyone to propose their own marketing proposal to the marketing budget on Snapshot and give it a go. And if the community likes it, you'll get approved. So there's a million different ways at this stage of the game you can help Beanstalk. But the number one has to be just getting more eyes onto Beanstalk in a positive way. So through friends, through high quality podcasts and the like, and then separately on the specifics, creating content can be used to help market Beanstalk, bringing in developers that can help develop Beanstalk. We're sort of at the phase where we are in need of more talent and in need of more labor and in need of more people around Beanstalk to continue to develop this at the pace that everyone wants it to be developed, keeping in line with the quality that thus far Beanstalk has been developed. So speed and quality are obviously at odds, and an increase in developer talent around Beanstalk can go a long way to helping with that.
That makes sense. And for those of you who do want to stick around and either raise your hand for certain things, ask more questions, or even just strategize and theorize around how we can make progress on a few of these things, we'll be chilling here for shortly after we finish this this AMA, so to speak.
Maybe as a last thing to add on,
Go for it.
On the advice of some of our community members, over the past couple days, at the bottom of our categories in the server, we made a DAO category with a general DAO channel where you can kind of hop in and say what your skills are or what you would want to work on and the like. And once you make a saying kind of what you're up to, you get access to the rest of the DAO category, which we're going to try to use to focus a lot of the community effort around Beanstalk in a slightly more organized fashion. So if that interests you, come hang out on the DAO category.
Got it. Makes sense. So it looks like folks have been, obviously thank you everyone for sticking around and participating and asking the questions. These are all felt very natural to me, but these are all things that, I learned a ton. These are all things that are important and I think Bean Merchant talked a little bit earlier about the scholar calls that are happening, the next one on Tuesday evening. I think it is important that everyone is able to conversationally talk about this. I mean, I personally have gotten a few of my friends to come in and so granted they're already in the world of crypto, but depending on your familiarity with crypto broadly or not, I think it's important that everyone understands what's happening here and what you're getting involved in. So that's first. Um, we talked quite a bit about pretty much everything, really. We kind of spanned the whole gamut. So I'm excited for the recording. I'm probably going to listen to it myself one more time just to make sure I'm up to speed on everything. But for those of you who joined a little bit late, there will be a recording. So look out for that and you can catch the beginning of the conversation. And I think, Publius, I think we should do these on a regular basis. So any preference on your part? I'm thinking maybe once every 2 weeks, potentially 3 weeks, but maybe we should reconvene after a few weeks and just keep these going on a regular basis. It can even serve as an orientation for new folks.
We're happy to do this as much as people would like, as frequently as once a week if there's demand for that. The only thing to kind of mention is the only reason we wouldn't do this every week or every day is we don't want Beanstalk to be dependent on Publius. So to some extent, there's real benefit in having as much communication with the community so that everyone is on the same page as possible. That's very valuable. But we want to make sure that we're not conducting ourselves in a way that creates the expectation that this is going to be reliant on Publius indefinitely. So that being said, in the short term, this is still very much early days in Beanstalk, we hope, and accordingly, we're happy to have as much communication as people would like. So every week, every 2 weeks, whatever that may be, and then over time, we can scale that down or up as appropriate.
I think that makes sense. Obviously, there are some business continuity issues. Maybe we can figure something out offline, but I think let's mark maybe 2 weeks. Obviously, if something changes, then we can do one earlier. But I think doing these on a regular basis is important, especially for new folks. And with that being said, unless you have anything else to add, I just want to thank the folks that joined, participated. This has been lit. Let's just tell it like it is. So at this point, I think if folks do want to stick around and discuss some of the more community initiatives in detail, we can do that. But Publius, unless there's anything else you'd like to add, I think we had a good session.
Just want to tack on that. If people would like to go ahead and post in the skill set volunteer channel, if they would like to be part of the Beanstalk Farms DAO, to go ahead, and that could help us in a more organized way distribute, labor and, see what projects we have that people could get involved with.
All right, sounds good. I feel like I have to start. I got to get my own version of this voice tool that you guys are using. I feel a little left out, but thank you guys so much for joining, and until next time, keep farming.
Thank you guys so much for coming and listening, and thank you IPO and Shell for hosting. And we're very excited to continue to build out the community, continue to build Beanstalk together, and from our perspective, this is just getting started. So if anyone wants to hang out and start to have a discussion on how they want to get involved in Beanstalk, why don't we plan to take like a 2 minute bathroom break, and then whoever's still here in 2 minutes or so, anyone who wants can join the stage, and we can start to have more of a roundtable. All right. That's exciting. 15 people are still hanging out. So, maybe the best way to do this is B Nation, you have your hand raised, so we'll just invite you up here and then we'll go from there. B Nation, you should be able to hop onto the stage at this point. Go ahead. I don't think we can hear you. Oh, now we can. Beautiful.
So can we have a canned sort of write-up that we can use to reach out to protocols or other podcasters that that we want to sort of market beans on? So just a write-up. Is there something we can already use or something that that we need to come up with?
There's not anything currently for you necessarily that you can copy and paste. On the one hand, at this stage of the game, most of the connections are probably going to be through your network, meaning a cookie cutter template probably isn't the best. But at the same time, it's obviously much easier for people if they have a sense of what are the highlights to post in the case where people want to just get like the TLDR. So we do have, I'm gonna copy it right now and I'm gonna paste it in chat. I can paste it in here. Maybe I'm just gonna post it in general DAO. People, anyone who wants can hop in there and read it. I just pasted that in general DAO.
Awesome. Thank you.
So, I'm going to remove you from the stage if I can figure out how to get moved to audience. But if you have another question, obviously raise your hand. And we're happy to bring you back up. So, Bean Boy, we're going to call on you now. Bean Boy, you've been invited to speak.
Hello, can you hear me?
Yeah,
Hello?
we can hear you.
Is this thing on?
Yeah, we can hear you.
You're good to go, man.
Oh, I see. The audio isn't on speakerphone anymore. Basically, I was just wondering about have you guys heard of Layer3.xyz?
No, I have not.
So basically, there's this platform called Layer3.xyz that allows you to incentivize kind of off-chain actions like marketing via bounties, kind of like public bounties. And so I was thinking it might be good to look into for Beanstalk to kind of, incentivize like high performing tweets about beans that, get high levels of engagement or views, or certain tutorial building type activities would be cool. You can basically just say like you will get paid in X currency for doing this thing.
That sounds awesome, and we've already noted it on our end. And if this is something that you would be interested in coordinating or being the point person for, it sounds great, and we would totally be on board to try to work to making something like that happen.
Yeah, I mean, I can work on setting up the Layer3 listing. Obviously, well, I guess it might require some work in terms of someone. I don't have access to the social account, but I assume that we'd want to send out messages for like payouts and stuff via the main social account and not via my account. But if you want assistance with like setting it up and stuff, I think I could do that.
Definitely. And we wouldn't want you to be on the hook for any of that, obviously. We would figure out a way to make it funded by the marketing budget. So we would be greatly appreciative if you led the way there, and we're obviously happy to answer any questions you have while that's getting started, and we can structure it together.
All right, yeah, I guess I'll send some messages in the Discord about it, but it should be pretty easy to set up. I believe I know people who work there too, so it seems potentially not too hard.
That would be much appreciated. So come hang out in the DAO, and we can coordinate this.
Cool.
Thank you very much. So if anyone else raises their hand, we can call you up here. But maybe just to create a call to action, especially given that anyone who's still hanging out here, we have a reasonable expectation you're interested in helping. Say, best way to get involved is to make it known how you want to get involved. So as we were saying before, at the end of the AMA, if you go drop in skill set volunteer in the DAO category, what you are interested in helping with, or where you think you might be able to add value to Beanstalk, would greatly appreciate that as kind of a good starting place to contribute to the community. Step one is just letting people know what you are interested in helping with. And Bean Nation, Bean Merchant, you guys are right next to each other, but Bean Merchant, who is, the sole community organizer at this moment, he will be doing a lot of the coordination there as well. So we would say feel free to ask us if you have an idea or present it in the DAO. And then, everyone should be kind of working with Bean Nation to make sure that it's coordinated, and that if you need help from other Beanstalk community members with whatever it is you're working on, hopefully we have a sufficient kind of group around Beanstalk that can pitch in and fill in wherever there's a little bit of help needed. So in the short term, we would say if anyone here has marketing ideas for something you want to kind of spearhead, a la what Beanboy just laid out, or even a specific project, like you want to host a meme contest and you want to put that together. Any of those are great ideas, and the ideas that you come up with are also probably going to be better than what we come up with. And we're be thrilled if anyone kind of takes some initiative there. And then the last place is just to reiterate, if people have any connections, podcasts, or other crypto media sources that they feel might be good exposure for Beanstalk, that would also be a great way to add value to the community at this stage of the game. So before we kind of disband, just wanted to offer a last opportunity for people to either raise their hand if they have something to say, or to ask a question that didn't get answered, or otherwise, if everyone kind of feels like they've gotten what they needed and can go just start hanging out in the DAO, all of that sounds very good to us. Awesome. We can't thank you guys enough for sticking around and for showing, an interest in working on Beanstalk and making this thing a reality. So it gets us very excited, very, very excited. And we can just close this by reiterating how committed we are to all of you to doing this the right way, to doing everything in our power to making Beanstalk a reality. And again, doing it the right way. So that takes a lot of time, it takes a lot of energy, it takes a lot of mental effort. And most importantly, it'll take a really strong community around Beanstalk. We're committed to making that happen, and we're incredibly enthused by the community that's starting to spring up around Beanstalk. So thank you everyone for your time today, and we will talk soon enough.
Thank you.
Take care, everybody.